Hello everyone, and welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live training session. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. I'll be demonstrating for you all the different tools that we offer, show you how to use them, how to set them up, and how to apply them to the markets on the live edge to help you to see how to trade and to develop a trading plan that is both consistently profitable and you as a successful trader. So I want to make sure that everyone knows that we are here for educational purposes only, that Hawkeye Traders is not an investment advisory service. We're not registered investment advisors, so we cannot give you any specific trade advice. If you are going to make any trades in the markets, make sure that you get advice from a competent financial advisor before investing any money into any of these instruments. There is a large amount of risk involved in trading futures, stocks, Forex, or options. Make sure that you understand these risks and that you are willing to accept the risks in order to trade in any of these markets. Please don't trade with money that you cannot afford to lose. Never, ever, ever trade in a live trading account with real money until you have first proven you can consistently and profitably trade in a simulated account with a proven trading plan. Only then are you able to start tackling the mental gymnastics required in order to trade with live money. Because you don't want to be distracted by developing a trading plan or learning how to trade or any of that other stuff while you're actually trading with live money. There's just too much involved. So make sure that you have all your ducks in a row before you start going out onto the water. I'm currently showing my NinjaTrader platform. I do have a 3, 6, 12-minute chart time setup. At Hawkeye, we believe in trading in multiple time frames. And you ask, well, why do you trade with so many charts? Why is it multiple time frames? Because we believe that volume is the key to trading in the market, and trading volume on multiple time frames will give you the maximum advantage against the institutional traders and the other market makers out there who are trying to make a market off of your money. So make sure that you have the best tools and you have the best education. I'm here to teach you how to do that. So provide the tools and give you the education to do it. So 3 time frames is important because the longer time frames show us the larger trend. The faster time that you go, the more noise you get. What looks like a really nice smooth trend on a long time frame looks like a choppy mess of noise on a fast time frame. So you've got to be able to take into account the time frame that you're trading and be able to look at it in the perspective of a longer time frame. So when you learn to trade with volume on a longer time frame chart, and then you translate that to a shorter time frame chart, then it's going to help you as a trader to trade and to understand and see why the markets are doing what they are doing and when they are doing it. I was looking at the gold market this morning, and I was really it was really interesting to me because I noticed quite a few things that volume really pointed out to me. Okay, a couple of things that we're looking at here is that if you're looking at the longer time frames, I noticed that on the reversal and downtrend that we saw a lot of selling volume coming in as we were just coming up into a proven and known supply zone here. This overhead resistance, and as price moved up into it, when you see volume starting to signal that sellers are stepping in aggressively, this is a really good sign that the trend in this market is coming to an end. Then when you see a double attempt and a consistent trend of neutral or distribution going on, then you can see that there's a big distribution. Sellers are coming in, the buyers are starting to step out and change their mind. So as the market starts to weaken off and then you see the transition coming back in a demand zone, then you see just the opposite occur. So when you're looking at the 12-minute chart, you can see it from last night and from earlier this morning. You can see that there was a clear topping pattern occurring here. Okay, so you can see that whatever the rally was that occurred, that it was occurring at a very attractive price to sellers. So these sellers, every time price pushed up, the sellers were saying they're selling off, trying to trap retail traders into the high of the market. And then in turn, they come right back around and rally the price right back down again, okay, to a certain point, and then you see a big blow off. You see a big wide bar, and we call this an exhaustion bar. And these exhaustion bars come off at extreme lows. And when you see buying volume coming into these types of blow-offs, when they're coming down into regions we know that buyers find attractive prices, then it's very clear to say that the market is going to start reversing and going back in the opposite direction. You can not only see that on the 12-minute, you can see it on the 6-minute and even on the 3-minute. So when you see these types of indications, and that tells you the current trend, in this case of selling, has come to a completion. You've got exhaustion, you've got a turnaround, and now you're starting to have accumulation distribution again in the market as it attempts to create a direction. Now you start to see an overall trend of buying occurring during a price consolidation right at the prior level of break, and then you start to see a confirmation that buying, aggressive buying, has started again. Okay, so those are the signals that Hawkeye is very clear to give you when you're looking at trading these markets. And if you're trading with the understanding of volume and price together, then it gives you these clear indications that, hey, the markets are starting to align. And when these changes occur, you see this is right here. This is the big sell-off, and these are the buy signals that we had gotten. Hawkeye starts to give you several indications of where to jump in, and when you see the alignments occur, and price becomes attractive to you and aligns to your methodology, then you can see when you apply the tools, you can see that a 2-to-1, 3-to-1, even a 5-to-1 profit target risk reward ratios are very possible if you're trading in these markets using the Hawkeye method. Now, notice that the market is starting to be overbought again. Notice that the price is starting to see some resistance at this level. It's testing it yet once more to see if it's going to break the high or if it's going to continue. You can see the price has gotten right back into that same supply region that we saw before. So right now, we've got to see if gold can prove itself. Is it going to break through the top at 1246? Or is it going to be sold off again and come right back down into a 1240 region? That's the idea, and that's where we are looking at. Are there any sound issues right now? Can everyone hear me okay? And is everyone able to follow along with my analysis? No issues? No? Okay, you can hear me fine? Awesome, great. All right, I guess just one guy had some problems. He left. Hopefully he'll come back in. So if you have a fairly slow internet connection, I am broadcasting at HD, so I want to make sure that you guys get the best quality possible. So the sound might be internet problem, but we'll see. Sounds good. So now we're starting to see a red volume coming in. So that's telling me right here this build of buyers trying to break through has failed yet again, and now sellers have popped back in again. So it looks like we might be continuing this cycle of sell-offs. And so the 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 longer term trend that we see in gold, just from the hourly, it has been wavy. It's been choppy. It has built up, but it has consistently broken through each of these bands and it's continued to build. So as we see this hammer away, since price is interacting, this blue now will change to an orange color. And then once we see that weakening, gold might actually have a chance to break 1245.30. It may need to retest based upon prior history, this 1239.90, but once it does, we'll see, let's see, then 1250 looks like the next probable target. I'll have to look at a daily analysis in order to see that a little bit better. Oops, I think I got rid of that. Oh, there it is. So I just wanted you guys to see that. I want you to understand the relationship with gold, the relationship with gold, the relationship with volume and price, and understanding how to use it with multiple time frames. It is really the key to understanding that. And all the other Hawkeye tools just support that. They show you when the alignment occurs with the multiple time frames between volume and price, momentum. When everything gets turned on at the right time, then Hawkeye tools are here to show you that they are working in sync. I've been watching the NASDAQ recently. Let's take a very quick look at that. If we were to look at the longer term, you can see there's a lot of bullishness in the NASDAQ market here recently. We had a nice support and then a build. And then you can see that the daily trends tend to be strong with a few exceptions. Okay, and then we've been in some consolidation the past couple of days, but now we're starting to see a breakout of trend, and now we are breaking out to the long side just above an established supply zone. So that supply zone will now go away. This trend of demand zones are showing you that there is a fairly strong trend developed in NASDAQ and will continue to build as we go on. The next target looks like it's nowhere to be found because we are at all-time highs, so we're not going to be seeing that anytime soon, but we know that it is breaking out and is pushing into that area. So watch out for false breakouts, watch out for potential retest of the trends. The fat boy is showing that there's a lot of strength in the S&P, and a lot of strength in the NASDAQ, a lot of strength. Let's see, what is that? In crude oil, looks like the mid cap also is showing some strength. The bond is very weak. The gold looks like it is just trading around fair value. So overall, we're seeing an overall bias of bullishness in the market from the KISS, and overall direction of the market looks to be trending upwards at the moment. Carmelo wants to look at a little bit longer term gold. So let me see if I can pull up gold on a longer term chart. Here I have a 6-hour gold. Okay, you can see prior support, 1250 is the target here. Looks like we've come right back down into a known supply. Gave us a nice little money bounce, which we saw on the previous charts as well. Looks like it's starting to push up, but again, we've got to be able to break the prior pivot high that we've got right here. That pivot is looking at about 1245 even. So pushing back up, the target is at 1250 still. So we are on a nice trend. We have broken the downtrend and we've come into an established long trend on the 6-hour gold as well. Okay, hope that was good. So let me go back. There was a question that was asked earlier to see if we could go through the Hawkeye Fat Boy, specifically looking at some of the currencies. I think I'm going to do that really quickly. The Hawkeye Fat Boy is a tool that we use to show us individual strength and weakness or to identify correlation in the market. Similar to the Fat Man, let me show you that real quick just to show you the differences. The Fat Man is a currency strength meter that shows you the overall strength, like we see right here, of the Canadian dollar, and the overall weakness, like we see here in the US dollar. And then based on that, we know an expected trend and direction of the market that is taking. Couple that with volume, and as we just were showing you earlier, when we see buying extreme or selling at extremes, then that helps us also to align with the direction the Fat Man is telling us with the current direction that is trading. So when we see sell-offs at these highs, retail traders trying to trap you in, when we see these sell-offs coming in regions of known supply and demand, then we know it's clear the direction as given not only by the Fat Man, but by the price action and volume. So couple that now, if we're not looking at currencies, if we now transition and start looking at futures or equities, then the tool that we use for that is right here. It is the Hawkeye Fat Boy. Okay. The Fat Boy, if you look at the actual indicators, uses a series of specific instruments that we are interested in. In this particular case, I am using the S&P, the NASDAQ, gold, the Dow, the bond, and the crude oil. All right, so each of these are front month contracts that I'm looking at. And so I'm looking at the relative strength of each one to the next. When you see markets that have some correlation to them, like the S&P, the NASDAQ, the YM, then when they are tightly wound together like you see here, then you see that there are generally trends of strength or weakness that occur, and we will usually see very nice trending markets during those periods. When they are decorrelated, like you're starting to see here, when the S&P is strong relative to the others like the mid-cap or the NASDAQ was showing weakness, then those are usually periods of consolidation or congestion. And so that's really important to see that as well. When you start to see the bond trading counter to the market, then that also gives you some specific information on the either strength or weakness of the market. And then I like to throw in gold and crude oil because sometimes I like to see how they are relative to the other markets. So the question that was asked was, what if we have a Fat Boy that's set up to look at only the currency futures? Okay, so if we were to look at a Fat Boy that was set up to look at just currency futures, then I have here a list of 6 of the major currencies that are all relative to the US dollar. That is the 6A, the 6E, the Australian dollar, the euro, the British pound, 6C, the Canadian dollar, the Japanese yen, and the New Zealand dollar. So these are all set up to help me to see the relative correlation of all of the markets relative to the US dollar, and it helps me to see which one is strong or weak relative to the US dollar and to the other currency pairs. So right now, let's see, what color was that? I think that's Canadian. That's number 4. Okay, so number 4 is the Canadian. So the Canadian right here, let's see, wait, I got confused. Yeah, number 3 is yellow, 4 is blue. So the Canadian dollar right here is showing that it is stronger than all of the other pairs, okay, relative to the US dollar, and that the red one here, which is the Australian dollar, is weakest as opposed against the US dollar. Okay, so if we were looking at these trends and directions and stuff, well, it looks like the Japanese yen now has become the weakest pair. So these are just ways for you to be able to set that up and look at those. So you're not limited on the pairs that you use on the Fat Boy, okay? But the information it gives you will be unique based upon the information that's provided. How did we get the name Fat Boy? Well, the fat man came along first, and if you show you the fat man real quick, see the fat man. It's kind of like the father of the fat boy. Um, it just looked like a whole bunch of lines, squiggly lines. If you pull up a chart, you can see it just looks like a bunch of spaghetti. It just this was given the fat man by Nigel. He liked the name, and he for some reason was able to see uh, that referring to this as the fat man was kind of common and actually unique. So the fat boy just kind of came from this being the fat man is all. It looks like a chart that at times can be very big, but at other times tend to have some correlation to it. And so this one looks like it's more like a sibling or a child of the fat man is all. So, yeah, what's in a name? It is a relative strength. It is also a correlation measure. So we're looking at relative strength and correlation of the markets. Absolutely. You can set it to any time frame. Right now I have it set on a 3-minute. Oh, this is 5. That should be set to 3. It's set to a 3-minute and a 3-minute chart. They should match. If you have a 3-minute indicator, you need to make sure that the chart is 3 minutes as well. And of course, you can do that with any other instruments as well. Let me go over to the TradeStation platform real quick to show you that. I have a workspace that's set up here that has a bunch of different fat men on it, fat boys. Right here, this is the same fat boy that we were looking at earlier. Okay, where I have, if I were to load this up, I've got the Australian, the Euro, the Pound, the Swiss franc, the Japanese yen, the Canadian dollar, all loaded on this one. So this gives you the same relative correlation and strength that we saw earlier, except it's on a 60-minute time frame instead of a 3-minute. Right here you can see that I've loaded the fat boy up with sectors. These are ETF sectors, sector ETFs. And what the idea of this is to show me which sectors are strong or weak relative to the other ones, and that helps me to identify the specific stocks that I want to look at relative to the market. So if I see a very weak sector, then the stocks that are in that sector have a very large value potential for coming back. Ones that are overbought might be ones that I have not as much value, and I might be getting rid of those. Okay, when they are trending all together, then I know the markets are really strong and are starting to work in tandem with each other. Here I have individual stocks. So I've taken from those sectors, I've taken some of the stronger stocks like Apple or Procter & Gamble, Walmart, Alcoa, ExxonMobil, Yum Brands. So I've taken different stocks out of different sectors, and I'm looking at them individually to see how they are performing relative to other ones. So anybody that spread bets or does any types of capability to do that, then you can see the value and utility of having something that tells you this is very strong relative to this, and so you can take an advantage of that, especially if you are trading options or if you're looking at um, pairs trading based upon options. And then that's also a very nice tool to use in order to do that. Thomas, the symbol I'm using in the Fat Boy for all the mini contracts are on this one right here. I don't currently have it displayed because it has some delayed data in it, but I'm using the S&P 500 at ES, And within TradeStation, I use continuous contracts so that I don't have to worry about rolling them over. On NinjaTrader, I always use the front month contracts. I can use continuous, but some data providers don't have continuous contract symbols for NinjaTrader. So I just use the @ symbol for in TradeStation for the continuous and front month contracts on NinjaTrader. This right here is the same as this, except I'm using ETFs to show these symbols. In this case, I'm using the spider, the Qs, the IWM for the Russell, DDM for the ultra short or long, the Russell mid cap, and this is for the dollar. So we're looking for relative correlation between the markets. When all of these align, we know we have a highly correlated market, and when they don't, we know we have a congested, choppy market. What's strong relative to the others, and so forth. And so instead of using futures data here, I'm just using ETF data. That's all. All right, so going back to NASDAQ, we can see that we are, after the opening range, we are very congested and sideways. We've broken out of the top, but we're still trying to decide what we're going to do with this market open. That's why I don't trade the first 15 minutes of the market, because there's always going to be noise and congestion in the market. And there's usually a lot of news that comes out this time of the week, usually right around 10 o'clock. And so looking at the news sources and stuff, then we can see that today there's no news at 10 o'clock, but at 10:30 we do have crude oil inventories that's coming out. We did have some news this morning at about 8:30, but right now the only thing we're looking at today is just crude oil. It's going to come out right about the ending time of our training session today. I would not use the Fat Boy for trading Forex. I would only use the Fat Man. The Fat Boy is just for trading futures contracts or equities. Here you can see I have my Fat Boy loaded. The Fat Boy in this particular case is loaded up with the S&P, the NASDAQ, gold, the Dow Jones, the mid cap, and crude oil. They're all futures contracts because most of the things I trade on this chart are futures. If we are looking longer term, then I do have a Fat Boy that's set up over here, but on the Fat Boy, for it, I do have set up on a daily time frame, and here I am looking for specific trends of the markets as well. So the S&P, the NASDAQ, the gold, I'm looking at the same thing, but I'm looking at them on a much longer time frame because they're set up on a daily time frame. So that gives me overall correlation trend on a longer time frame. So looking at the Fat Boy on a longer time frame helps you to see very clearly the overall longer term trends, or how you can see crude oil has come with strength, came back off with weakness, now is starting to show some build back into strength. And same with gold. You can see that gold's huge rout, and then it tried to come back in, double bottomed, and then rallied back up off of that again. So if we were to pull up the gold contract, then you can see that the exact same correlation here, where it has come back down, bounced back down again, and now is starting to come right back up with some strength. If we were to look at the crude oil market, then we'll be able to see some similar correlation, that we've come up in strength, but now we've started to come back down, and we've shown some weakness in the trend. And then right now we're starting to see if we can break that downtrend or not. On the longer term, you can definitely see the weakness on the weekly chart and that weakness on the monthly chart. But that monthly chart is still very consolidated, very much in a congested range, and needs to show some considerable strength if it's going to come out of that. So all of this, I'm giving you the information based upon my understanding of volume and price, and the Hawkeye tools give us the ability to decipher and to very quickly determine where we are in the market, what the market conditions are, whether I want to be a buyer, a seller, or whether I want to be in that market or not. The tools are very clear to help me to do that, and the more you use the tool, the more you see the utility and usefulness of the tools in your own trading. David, if I already covered it, let's see. Can you talk about the crude oil and the potential setups? Okay. Crude oil on which time frame, David? I just covered a little bit of an overview of the crude oil longer term. Right now, we are still longer term short to congested on crude oil, but right now we are seeing a short term build of strength, and we need to see that strength broken if we are going to break this downtrend. And you can see that it is established downtrend because we can see a trend of lower highs and a trend of lower lows. So until that trend is broken, we're still looking at the overall direction of crude oil being weak. So right now, though, if we're looking intraday, we see a corrective move on crude oil with a trend that is long right now on the daily. So if we were to go intraday, right here I will look at a 3, 6, and 12 minute time frame. Then you can see that overall direction from an hourly time frame. You can see that the corrective move that we had been looking at, okay, right there. See this correction, when you look at an hourly chart from a daily correction, then you can see that there's a lot of bullishness. So trading in the direction of the longer trend is more rewarding, but even inside that daily trend, you are going to get these corrective moves. But as I taught you, understanding volume with price gives you these types of signals so that when you see this alignment, when you see this setup right here, you're trading along and the prices come along, and all of a sudden you see price pushing back up into overhead resistance. You know it's a supply zone. You know sellers are coming into the market. Then when you see that red bar close paint, then it's a very clear indication that price has a high probability of reversing from that point. You don't know for sure that it's going to go down, but you have a really good idea because you can see that you've double topped, you've come into a resistance area, and you have sellers aggressively selling that market. So that tells you a lot right there. So from that, it gives you a very high probability that the market's going to correct from there, and it did very aggressively. Okay, market tried to come right back again, and then what happened? Boom, a lot more aggressive selling came in. Look at that. Aggressive selling to start it off, a attempted rally, a push high, market makers trying to get retail traders trapped at the high of the market, and then the sell-off. But then when you see attractiveness comes back in again, then you start to see buying coming right back in at these attractive values. So when you see demand regions hit with buying attention, then that's saying the brakes are being put on the corrective move. Look for that correction either to stabilize, consolidate, or reverse. In this case, that's what it did. It stabilized, came 3 times, validated, and then it reversed. You can see the overall trend of lower highs and lower lows was broken, and that we started to get a reversed trend of higher highs and higher lows. We went into a region of consolidation where that was broken. An attempted push up, a breakout, consolidation. So on the hourly chart, we're still in this same choppy consolidation range. But overall, we are in an overall uptrend based upon the daily, or an overall downtrend based on the weekly and monthly. So with that information in hand, trading intraday then just makes it a little bit easier for you to understand where you are in the market and how to apply that. So right here, we're seeing a trend that's aligned with the longer term trend. You've got buying coming in, but you're coming up into a known region of supply. So we've got to be watching volume, and we got to see what we're going to be doing with that. So based upon that, buying up into a push into that zone should be taken with caution, not with zeal. Because you can just see the choppy nature of the longer term trend. You can see all morning long it's just been sideways, range bound, and kind of choppy. So crude oil might not be very rewarding today. And if you were to take these trades, if you get an alignment like you see right here and right here, where it's valid to enter these trades, then take profit targets soon, because the strength of this trend is not as good as you would want to see it. That's just my 2 cents worth. Yeah, I don't think you're going to see real strong trends either direction unless we get a really strong um, um, crude oil inventory report today. What we had said earlier, crude oil is coming out at 10:30. They're expecting a 3.6 million barrel drop in the forecast. Last time, there was a huge drop. So that's if they are expecting continued drops. If it's in line with this, then it might already be priced in. The price might have already accelerated to the point that it's already priced in. But if we get a much larger drop, then we would expect a lot more bullishness out of crude oil. And if the Saudis have again agreed to reduce their inventories and their production, then that also could already be factored in. But right now, they're expecting a drop of 3.6 million in the inventories, and we'll see what it comes out from relative to the previous one. A larger drop will be bullish, a smaller drop will be very bearish. Remy, you can always trade the market open. When I'm trading for trends, then I usually do not trade until the first 15 minutes of the market have passed and I have a valid market to trade in. But if I'm scalping the market, if I'm looking at just trading the opening of the market, then yes, absolutely, I can do that. And this is the workspace I use in order to trade that. I use the the gearbox, which gives me the tick speed settings for each day. And based upon these tick speed settings, I use the fastest tick speed as a chart that I use to look at taking trades. So when I see the trade initially start off, okay, my scalp strategy tells me that when the initial opening bar is broken, the direction of the trade and all the other conditions are met, then I can take that trade and push that trade in. So taking this as an open, then this would have gotten me in long, and then I would have taken that to a set profit target, which would in this case have been 2 points. And then I take my profit and wait for the next trade. In this case, the next trade got it right here. The next entry got it right here. So this was a confirmed entry signal. So this confirmed entry was a consolidation that broke. So I would have gotten long there, and I would have looked for a 2-point profit target, which would have been hit there. So that would have been another one right there. And there is if I was still in the market at that point, that looks like I would not have been, then I would have taken my profit here. I would not have taken this as an entry signal because I was already in a trade from here. So I would not have taken that. If I did not enter this trade, then this would have been a valid entry and I would have been able to take that trade. Okay. Now right here, based upon the cycling of the trend, you can see that is a valid short signal, but the secondary time frame had not aligned. But that is still a valid short signal. So at this point, I am free to take a short. because I'm only following the shorter time frame cycle. So I'm trading uptrends when they give me and short trends when it gives it to me. So in this case, take this as a short and you're looking for a 2-point profit target. Two-point profit target, 64 and a quarter. So we're looking at 62 and a quarter right there. So this is your profit target right there. Yes, the stop is always going to be 1-to-1, or at the green line, whichever is closest. So this is a 1-to-1 scalp strategy. I'm not looking for a 2-to-1 or 3-to-1 or anything else. This is just simply a simple 1-to-1. My stop is always going to be the Hawkeye stop or a 1-to-1 ratio, whichever is closest to price. That's my scalp strategy. Scalp strategy using the Hawkeye gearbox fastest setting only. I'm not looking at multiple time frames or anything else. And when I take the profit, then I'm done. A lot of times I will look at the average true range of the market. And based upon the average true range, I do have a chart that's set up here that shows me that. The average true range of that is right now is about 50 cents. So the average true range of this tick chart is about 50 cents. So one ATR is about, 50. If I'm looking at half a point. Actually 50 cents, that's one full point. Isn't that right? No, 50 cents, that's half a point. Yeah. 25, 50, 75, that's, yeah, it's half a point. The gearbox works awesome for stocks. I use the gearbox settings also when I'm scalping, and I scalp several different stocks like Micron. Uh, I scalp BABA, and I scalp NVIDIA, and I scalp I can't think of the name of it now. I'll have to pull up my charts. I like to scalp the really fluid ones because they come out really nice. So I'm just using the fastest tick speed on the gearbox to do that. As long as as long as it's fluid, you have very high volume, then it will work real nice. If it doesn't have a high volume, then it's not going to work that well. High volume is the key. If you look at the time frame for this, let me see if I have that loaded on here or not. Time bars, I don't. So see, like you see on this chart right here, I have 2.4 minutes per bar. The 1944 chart is, two multiples of this, and it is a 2-minute chart. So you can see the time frame for this is on probably less than 1 minute. So this is a 1.2 minutes. So this is about a 40 or 50-second chart if you're looking at actual time frames. So this is pretty fast. I would consider that to be scalping. So you got to take that into account when you're looking at it. When price consolidates and breaks higher than the consolidation range, okay, and it's against the trend, see I trend down, consolidate, and the break above, exit the trade. Exit the trade. If you get a re-entry signal, then you're free to get back in again. But don't give up money that you've already taken. hold on to it and keep it. There's no need to wait for it to hit your stop if you already see signs that the direction of your trade is weakened or not going to happen. We were one tick off. Yeah. So even taking 1 point is fine. Even half a point, as long as you're even break even. If you're scalping, the name of the game, okay, is speed. You've got to know your strategy. You've got to know yourself and where your profit targets are. You've got to know all of that before you ever get in, because you don't want to be trading with fear and greed. You don't want emotions to start taking over. You just want to trade your strategy. And you've got to know it pat. You've got to know it like the back of your hand. Frank wants to know if I have a daily trade room. I do not. A lot of people keep asking me about that. I still struggle with the restrictions that the uh, monitoring communities put on me with regards to trading. I don't want to, I'm not a registered trading advisor, so I'm trying to decide if that risk is worth it or not to trade live in front of people, because sometimes that can be construed as giving trading advice or not. But I need to look at that and see and consider whether that's something I want to do or not. I haven't gone to that yet, but no, Frank, I do not currently right now. Does anybody have any specific questions about the software itself? Any new time people here for the very first time don't understand an aspect of trading or what we're looking at? Want to know a little bit more about what we're looking at, why we make the decisions that we make, or how to get started with Hawkeye? If you go over to Hawkeye Traders website, hawkeyetraders.com, you'll get a whole lot more information about who we are, what our methodology is about. You can also go down and right here under understand how they work under volume spread analysis. If you click on that, then that takes you to a wonderful page that talks all about understanding using volume, how volume trading works and how it's developed, and how we use volume in our markets, how the FOREX volume problem has been solved using Hawkeye volume, and a summary and a link to help you to get started right now. So if you click on that link, then it will take you to our Getting Started page, a way for you to get started. We have 3 different packages that we present to you, either the starter package, our standard package, or the professional package. Each one of those have different tools available to you based upon how you purchase it and based upon which platform that you purchase it on. Okay. However, today, since you are in my webinar, I'm giving you a one-time special deal today. Since you guys are here, if you want to purchase the starter package and get started with 5 of our most sought-after indicators, the volume paint bar, volume radar, the pivots, and the wide bar, which are part of all of the other packages, then I can provide that for you for only 97 bucks today and today only. And you can do that by going to this link right here, hawkeyetraders.com/WED, and I'll show that right here. Boom, hawkeyetraders.com/WED. Let me send that to you so you can click on it as well. And if you click on that link, then it takes you to a web page that gives you a little more information about what is included in the starter package. Some of these specials that I've included, a bonus, I give you several 2-hour on-demand training courses that show you exactly how to use volume with your current methodology. and then it gives you the opportunity to click on and buy the links for the packages you're interested in. TradeStation, IntraTrader, MetaTrader 4 for $97 instead of the normal standard $360. Oh, sorry. Okay, this is what we sell it for every day. But during my webinars, I like to give you an opportunity to get on board. And then when you upgrade to any of the other tools as a member, then you get members privileges, you get members discounts, and you also get full credit for your purchase towards any upgrade that you do. Okay, none of these are monthly charges. They are just one-time fees, so there's no other monthly charge after that. Oh, but you're looking at the Frank. Let's see, purchase the starter package. Okay, if I subscribe to the full monthly package, so the full monthly, I'm not sure what you mean by that, unless it's the Tomahawk. If you're referring to the Tomahawk system. But well, absolutely, Frank. Whatever you upgrade to, we always have help to get you going and to get you upgraded on that. If you need more than just email assistance, then we do have a fast start service. That if you actually need a technician's time, then for 1 hour we will give you a full technician's time to come into your computer, install whatever that you need, install all of your software, install your platform, set up your second computer, set up your workspaces, whatever you might need. We do have a service for that, and that's called Fast Start. So for $65, you get a full hour of our trained technicians' time on your computer doing whatever you ask them to do. So that's the best way to get going on that. Our installers are very easy to install. They usually are just one-click install, and then you're up and going, and all you have to do is just update the membership site with your information, and you're good to go. It's very easy. Raji, upgrades? No, you have to pay for any upgrades. So if you're upgrading from one package to another, you have to upgrade. You have to pay the difference in the upgrade price, or just purchase the individual tool that you like. So that's the best way to get going on that. The starter package is the best way to start. All right, you're very welcome. Updates, Raji. Updates are free. So as we push out new versions of the software, then we release those new versions, and you have full access to those at no charge. But if you want to upgrade the software, yeah, that's different. You got it. All right, are there any other questions we might have? It looks like we're closing up and getting ready to end our training session. And it looks like we're getting very close to the crude oil news release. So let me click over there to that real quick. Usually when I'm trading crude oil and news comes out, I have a strategy that uses a 3-minute price bar. And once the news is released, then I will have probably a wide 3-minute price bar, and then I will usually trade the resulting trend based upon that 3-minute bar. Price usually is sucked back into the body of that bar and trades inside that range. So I will usually trade a breakout long of that wide bar or a breakout short of that wide bar in the direction of the break. And that's usually how I trade that. And if anyone is going to be in London anytime soon, then if you go back to our website, HawkeyeTraders.com, under education, then you'll find the London seminar right there. Then I will be in London live on the 10th through the 12th of September. And joining me is going to be Marcus Toombs. He's the designer of the Hawkeye Tomahawk system. I was even told just the other day that Nigel himself is going to be stopping by just to say hi. So you'll get a chance to meet all of us there, September the 10th through the 12th in London. Okay, we're going to be staying in the Kensington Forum area. So if you'd like to be around, if you'd like to come, then we have some very special rates set up for you and some nice sessions. We have included in the 2-day regular basic training class a third day, which is the advanced training. Okay, so we have coupled our basic training class with our advanced training class into a 3-day power-packed seminar where we'll be showing you live for 3 full days not only how to take and apply these awesome tools, but how to actually trade them and to use them in the markets. So come on out to London. It's going to be great. I always enjoy my trips out to Europe, so I look forward to meeting all of you in person and sharing with you all of my strategies and the techniques of getting Hawkeye up and running as quickly as possible. So that would be awesome. A little more information about what's covered in the live seminars are here on the seminars page. Feel free to read through there, find out the information that's included. And if you have more detailed questions, then you can always contact us. You can contact me directly, Randy at HawkeyeTraders.com, or you can contact our team at team1@HawkeyeTraders.com for more detailed information about that. In the seminar, what's covered in the seminar, Mike? Some of the basics are here. The basic training, we go through the 6 ways. We identify how to be in sync with the market. We will identify true market reversals before they actually occur. Okay, how do you know when buyers or sellers are going to be entering the market? All right, so how to double or even triple your results using the profit accelerator. How to take profits and how to stop giving your profits back. There's a lot of information. Money management, scaling, longer term trend trading. And then in the advanced class, we show you a lot of techniques that will help you to use these scanning capabilities, the Hawkeye scanner, in order to go and look for potentially huge trades, how to identify these pullbacks or corrective trends, how to use advanced methods of the Hawkeye tools, like the Roadkill and the Fat Boy, how to use the Gearbox or the TradeStation's scanner. I'm also going to be sharing with you my personal trading plans for like crude oil and my scalping techniques as well. The trade setups, order execution secrets, quick keys, and things like that are all going to be taught and shown through the advanced training class. And best of all, I don't try to sell you anything during the seminar. You're already there. You're there to learn, and we focus on training. So please come out to the seminar. I would really love to meet you guys. All right, looks like the report just came out. Looks like we have a nice bullish bar. What did the news say? $4.7 million. 4.7. So looks like they've gone down a little bit. So that is going to be bullish. If it's larger than this, like I said, we're expecting bullish outcome. So that's exactly what's going on right now. So I'm sitting here waiting for this 3-minute bar to form. Once that 3-minute bar forms, then on a break of the high, I would be long. On a break of the low, I won't be short unless I get an actual signal to get me short. And that's how I trade that. Watch out to the long side because remember 47.50 is the target for the upside. And remember, wide bars usually suck back into the body of that wide bar. So that's why we wait for a break above or below that wide bar in order to take that trend. Okay? Awesome. This is a great session. I appreciate your time and attention. I'm going to go ahead and stop the recording at this point.